Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we have a finished three-wave corrective structure and we now look for impulsive continuation to the upside to new all-time highs. In this scenario, you're looking at a double zigzag, so a zigzag in W, any corrective structure in X, and another zigzag to the downside in a wave Y. In this particular scenario, what we then look for is a 5-wave impulsive structure to finish in a wave 1, see a 3-wave corrective structure to the downside in 2, which can be any corrective structure except for a triangle because that is not allowed. So you can have a flat structure, zigzag structure, or sideways WXY structures, and then you look for price to continue its way towards the upside. Now, if we then look at the bearish scenario, then in the bearish scenario, you look for one more low in, again, a double zigzag, but it's a bigger one. So again, ABCW, X, and another ABC in a wave Y. However, in this scenario, you're still working on your wave B. So 5 wave A, flat in B, and then a C to the downside. Now, this is where things, however, become very interesting. So there is 3 things that impact the probabilities for the bullish or the bearish scenario. 1, this move to the downside. 2, these highs. And 3, the retracement. And I'm going to explain all of them. So first of all, this move to the downside in the bullish scenario is counted as a wave C, which means it is a 5-wave impulsive structure on the lower time frames. 1, 2, 3, 4, 5-wave structure. In the bearish scenario, this move to the downside has to be a 3-wave structure or part of a 3-wave structure. Now, if you go to the lower time frames, let's hop to the 15-minute, then you can see this is a steep move to the downside, and we can count a 5-wave impulsive structure to eventually create the low. We don't see a nice clear 3-wave structure with a solid wave B here in a zigzag or a solid wave X. So just by looking at this structure here, the probabilities arguably are higher that this is a 5-wave impulse to the downside. Now, I have seen online that then some people like to count this as an A, B, C and then a bigger A, B, C wave structure. But mind you that this high here took out the high on the left, which means that if you want to count A, B, C, right, then your wave B here becomes a flat itself because you have your A, B took out the high, and then you have your impulsive structure to the downside in a wave C. However, a flat wave B in a bigger flat, right, is incredibly rare. Right, so a flat B in a bigger flat, incredibly rare. It will never have the highest probabilities unless everything else fails. So that also, of course, negatively impacts the probabilities for this particular scenario. It's not an invalidation, right? But it's just incredibly rare to see a flat B in then a bigger flat structure. So that is number 1. Number 2 is these highs. And these highs actually matter quite a lot because if price retraces to the downside before taking out this high, the probabilities increase for the bullish scenario. And the reason is that the most common flat structure is an expanding flat, A, B, and then a longer C towards the upside. The second less common structure is a regular flat, and you have your A, you have your B, you have your wave C, which is a little bit smaller but still takes out the high, and then you move down. And then you have your running flat, A, B, C, where C does not take out the high of your wave A. But a running flat is, again, very rare, is never preferred. So if you do not take out this high, and we can count an impulse on the lower time frames here, so 1, 2, 3, 4, 5, and you would retrace before taking out the high, it automatically increases probabilities for the bullish scenario. And then lastly, if you do take out these highs, yes or no, doesn't really matter, but eventually you get your retracement. If that retracement is a corrective structure, that is bullish because you look for price to continue towards the upside, right? That is what we want to see here. In the bearish scenario, this move has to be an impulsive structure. You want to see this basically, right? A copy. You want to see a 5-wave impulsive move to the downside. You don't want to see a slow 3-wave corrective structure. So what really matters and what impacts probabilities here is the move to the downside, the highs, and the retracement. Now, when we look at this scenario here, just to cover this, we have the target area here around 85 to 81, but we do have some additional support for price above it at about 87. Now, of course, talking about support and resistance, yesterday during the live stream, we actually went to the downside and tested this support beautifully, 89 to 90K, right? Currently moving towards the upside. Mind you, we are at a little bit of resistance here, which is the value area high of this volume profile. But to the upside, we have this blue box, 89 to 89.6. This white box, which is an order block, by the way, 100.4 to 101K. And to the downside here, 91.4 to 92.1K. So those are the areas where I'm interested to observe what price does. We also have some news today, Tuesday, 2:30 p.m. Central European time. So make sure you trade safe, as it can increase the volatility on the chart. It's not like we're missing any volatility. We got quite some nice price action, but still, you know, unexpected things can happen. And then we have the probabilities. So the probabilities depend on three things. One, the move that created the low. If it's a 5-waver, that is bullish, because you would count A, B, C, and you look for price to continue towards the upside. And at the moment, this move indeed looks best as a 5-wave structure. We never really got a clear 3-wave. If it was a 3-waver or is a 3-waver, that would be considered bearish. Number 2, take out these highs, yes or no. If you do not take out this high before retracement, that is more bullish, increases probabilities for the bulls. If price does take out this high, then it's all about the retracement, right? Because both a wave 1 can take out the high as well as a wave C can take out the high. So then basically this point number 2 doesn't really matter anymore. And then you get to number 3, which is the retracement, right? Once you get a impulse to the upside that is finished and you look for the move down, is that move to the downside here impulsive or corrective? 3-wave corrective structure, bullish. Impulsive move, bearish, right? Now due to the move here to the downside that created the low, the probabilities would be in favor of the bullish scenario. Nonetheless, see if price can take out the highs. It's literally on the verge of actually doing so. And then, of course, what will the retracement look like? I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.